Analysts at Cordros say that the release of corporate earnings with accompanying dividend declarations will provide a catalyst for buying activities and outweigh profit-taking activities in the Nigerian equity space. Ope Oluwa, the research analyst at Cordros, joins me now for this discussion. Thank you so much for your time today, Ope. And let's first get into sentiments for today and how the market fared today.
Thank you very much, Kenneth. So, looking at market performance today, we'll say that the tone in the market is somewhat that of a cautious one, in the sense that we start seeing investors basically take a breather and try to assess what earnings will be like 2023 earnings, basically, as they start to trickling into the market. So, I mean, this is what we think will be the key driver for market performance at this point. Notwithstanding, the market is still positive today by upwards of 2%, as we saw another price action on Dangote Cement, which, as a close of trading, was up by around 9.9% thereabout.
Yeah, because let's get to Dangote Cement and how that stock has performed, say, in the past 2 weeks now. I'd like to get your thoughts around that, and what are the fundamentals we see driving this?
Well, I mean, Dangote Cement, as you know, one of the key cement producers in the Nigerian market, and I mean, we start to see, or rather, we've seen cement, or the pressures that cement producers faced tail end of 2022 and beginning of 2023, and start to see a turnaround from first half of 2023, which, I mean, we think will be quite reflective in their Q4 numbers once it's out. And we also expect to see that better performance basically be sustained even as we enter 2024, driven by increased private and public sector demand from for construction and even for real estate development. So, in terms of the key drivers for the stock right now, I mean, we would cite price action by traders in the market at this point in time, who are trying to basically maximize all value that they can derive from the stock, and also to a certain extent position for possible future earnings that will be gotten from Dangote Cement as one of the key bellwethers for the Nigerian stock market.
Yeah, because we know of the billionaire investors moving to that stock. They're talking about Femi Otedola here. But then what other investors would you say are kind of driving this as well? Is it more of the PFAs or international investors or more local HNIs?
Yeah, I mean, it's more of local HNIs with, let me say, a sprinkle of PFAs here and there. If foreign investors pretty much are, wary of our markets at this point in time, and the moves or their moves in the market right now are quite limited, to stocks, or let me say, to names rather that they think have substantial upside value and upside potential at this point in time. So the moves right now are basically being driven by the locals.
All right, now let's look at the sectors, in terms of the results that we've seen so far, and your take on more or less some of the results we've seen from the energy space and banking.
Yeah, so like you mentioned earlier today, the total release numbers, and unsurprisingly, we saw revenue up by about 30%, which continues to highlight the key impact of higher PMS pricing in the downstream oil and gas market. But cost pressures still remain a key pressure point for these players, or for downstream oil and gas marketers like Total. And this was the key factor affecting their numbers, and besides, issues around the highly inflationary environment, basically, then also the impact of FX losses, which was quite sizable for Total. For the full year number, I think number that that was released from the audited numbers basically show FX losses of northwards of 10 billion naira. right? Which for Q4 specifically, which is quite sizable, and was the key driver for the poor performance that we saw in terms of earnings declining. But I mean, if you look at key operations, we see continues to see resilience from Total as continues to leverage its key share of the Nigerian market, as use this basically to continue to put out resilient numbers that continue to provide nice returns for investors.
Yeah, but when you look at what has happened so far, what's playing out so far, yes, we see that there's still some catalysts to drive the performance for the markets going forward in terms of the earnings that we're seeing, they're still expected to come out, and even dividend payouts. But you can't but help to think that there's a correction that's going to happen soon. How soon, in your estimation, do you think that's going to play out?
Well, I mean, we think that once we start to exit the earnings season, and let me say, once we get to the point where most of the market favorites start to release their numbers, at that point in time, or release their numbers, declare dividends, basically, at that point in time, we start to see, investors book gains, the significant gains that, been gotten so far this year. So, I mean, we mentioned that markets is basically up by upwards of 40% thus far, and they're still given current, the mood of investors, we think that there's still, room for market to even go higher than that. But at the time or at the point when, we start to get to a point where we understand or we understand what is going to, what earnings for 2023 basically look like and what dividends is going to be like, then we start to expect that, profit taking will start to work on the market.
All right, thank you so much for your time. The interesting times here for the markets in Nigeria. I'll continue to see the bulls continue to be on steroids here. Ope Oluwa, a research analyst at Cordros.